Welcome to the Monocle Banking Podcast this week, as always, curated by Monocle Solutions. And this week, we've got a guest who's really mastered the fine art of banking and a bit of the corporate roller coaster as well. Karl Kumbier, Capitec business executive, joins us now. He's no stranger to bold moves. He's navigated some of the trickiest roles in South African banking, from Stanbic, Ghana COO, to his current stint, where he's busy, shall we say, disrupting the business banking game over at Capitec. When he first joined by way of the Mertel bank acquisition, I bet there was no signing up for a quiet life in Stellenbosch. Karl and his team are rewriting the playbook for business banking in South Africa, bringing a no-nonsense, flat-free approach that's leaving the big banks scratching their heads a little. And if you're wondering how Capitec plans to offer all of this value at 50 Rand a month, let me assure you it's not just magic, though I do suspect that Karl might have a few tricks up his sleeve. So let's dive into the journey, Capitec's foray into the world of SMEs, and maybe figure out how one bank plans to shake up the game for millions of small businesses. Karl, welcome to the show.
Thanks a lot for having me on the show, Michael.
Now, your career has spanned everything from retail banking in South Africa to being the COO of Stanbic in Ghana. What's been the kind of wildest aha moments you've had in these roles that shaped your vision for Capitec business?
Yeah, I think it wasn't like one thing, but I think I took a bit of risk in the early days. I actually always wanted to get into banking. I managed to join a listed company that was specialized in electronics called Control Instruments in the old days. And it was in the late 90s when we were buying and selling businesses, and I really loved that. And then next thing, I was offered a job at the old SCMB, the old Standard Corporate Merchant Bank in the investment banking division. And I went across and I moved from Cape Town to Joburg, and I never looked back. I really loved that. So that was my start into banking. And then from there, I must say, one thing that Standard was good at was giving youngsters an opportunity. As long as you worked hard and delivered, you'd get the next big challenge. And there was plenty of challenges on that side.
Interesting that in those early days, it was the corporate investment banking, the cut and thrust of deal making that you were first attracted to. Looking back on that, are there any deals that you may have worked on that really stand out for you in kind of shaping your love of this particular field in banking?
No, when we joined the SMB, we actually were in a division called Investment Banking Solutions. And what we would do is we'd go and analyze large corporates' financials and then come up with ideas for them. So maybe a company, they're trying to raise funding, and they could go and issue a bond or do a securitization. Or we thought maybe there's a company that maybe wants to acquire another business. We put a proposal together, and then we would never execute on the deal. We'd just come up with our ideas. Then the corporate finance team or the debt origination guys, they would go and do the actual transaction. So now there was plenty of deals, but nothing we were physically involved in. We just came up with all the ideas.
No, you're the clever guys in the back room doing all of the ideation and building the solutions, and you let then
someone else takes the credit.
The guys in the flashy suits, isn't it? But you then found yourself at Mercantile Bank, which was founded back in the mid-'60s, wasn't it? I think it was previously Bank of Lisbon International, headquartered in Sandton. What led you to Mercantile?
Yeah, that's right. So what happened was from Merchant Bank, I actually went across. I thought I could make a real difference in the retail space. I really like the retail banking side, and especially business banking. Actually, Standard Bank sent me to the Western Cape to run the Western Cape province for them. And I spent 2 years there, and we had a great time, and we grew the business nicely. And then I got offered the opportunity to go to Ghana. They owned a bank called Stanbic Bank Ghana. They were looking for a COO to help grow the bank. We had 3 branches at that stage, and my wife and I said, well, we had a 6-month-old daughter. We said, it sounds like a great opportunity and exciting journey ahead. So we took the risk, and we moved across to Ghana, and we loved it. That's when you learn real banking, is when you build something from scratch. And a small bank comes with all its challenges. You understand exactly from end to end, from marketing to building your own product to collecting on the credit. So you actually have to do everything. So we really loved that. And then after 2 years, I got called by a headhunter, and they said they were looking for someone to be on the board of a small bank in South Africa called Mercantile, and they were looking for succession for the CEO, and it's a business bank, and would I be interested? And then I thought, geez, I love business banking. My whole family is entrepreneurial, they're all entrepreneurs, and I could come to South Africa and get the same experience I was getting in Ghana. And also the guy that was running Mercantile at the time, a guy called Dave Brown, he ran commercial banking at Standard in the old days. I used to work with him. He's probably like the best credit brain around, and thought I could learn a lot from him. And if I delivered, then there's a carrot at the end. You could actually take over. So we packed up after 2 years in Ghana and came across and joined Mercantile, which is exactly right. It was the old Bank of Lisbon original days. It started in 1965.
Au revoir. I mean, did you find initially moving the family over to West Africa a cultural challenge? Do you speak French?
No, but it's actually English. So that's funny enough. You look at all those countries, it's plugged in the middle. So it's right next to Ivory Coast, which is French. But Ghana was totally English. It is a cultural change for sure, but there was no crime. The people are so unbelievably friendly. They welcome you. They want to learn from you. It was actually a really amazing experience. I really enjoyed it. It wasn't one day I said, geez, I wish I hadn't gone there. It was actually brilliant. And just from my own learning curve, it was fantastic.
Absolutely. But then coming back into Mercantile, here you are as someone who certainly is an entrepreneur by nature, trying to establish yourself in building something. What was the vision for Mercantile back then that it wanted to seize in the local marketplace, being what is probably tier 2 bank competing against the bigger players? What was the vision back then?
I took over in 2013, and then I sat with our senior team, and we actually locked ourselves, and actually we went back to my house and we put ourselves in the patio, and we said to ourselves, right, what do we actually want to do? My predecessor left us a really nice business. So we had a brand new core banking system. We had more than enough capital. We had a lot of liquidity as well, so we could actually grow the lending, and we had a clean lending book. So he had spent 10 years like fixing the bank because they had a few issues in the early 2000s. So we said we've got all the ingredients to do something really special. And like anything, you want to set yourself a vision, something you want to strive towards that everyone in the bank understands. And we said we want to actually build the best business bank in the country. That was our goal. And we looked at it and we had 5 different divisions. And we said we put a plan in place to say, how do we grow each of those divisions? So we came up with a strategy for each. And our goal was to grow more in the next 5 years than the previous 50 years, because it's been around since 1965.
Yeah.
So how do we double the bank in 5 years? That was our goal. And off we went. And we had a fantastic team. And 5 years later, we did manage to double it. So we achieved our goal. So it was actually a great run. It was a fun day. So.
It was delisted back in 2012. So you managed to then do all of this as an unlisted entity. Do you think that helped, just helping you maybe set a bit more of a long-term, when 5 years is a long term, when you're listed and you're reporting every 6 months, a kind of long-term vision for the business?
Yeah, I think we always had very low liquidity because 90% was owned by Caixa, a holding company in Portugal anyway. And actually, if you think about it, if you only got 10% free float out there, it's actually not worth listed. That's my view. And we delisted. And I must say, one thing I will give our old shareholder Caixa is that we had a totally independent local board. The chairman was originally from Portugal, but when the chairman resigned, they appointed a local chairman. And we ran our own business. There was no interference. There was no telling us what to do. We presented our strategy once a year. So it was really good not being listed there. And we had freedom to now build this business in the way we wanted to do it. And let's go. And we consistently grew at our 15-20% a year for 5 years. So it was good.
And then another bank that had also been consistently growing at those sorts of numbers, if not a faster click, came along, Capitec, and the deal was announced in 2019, but I'm sure discussions must have started just prior to that. I've just finished reading TJ Stradham's new unauthorized book on Capitec. And the one thing that really does strike you, and every time I chat to CEO Harry Fourie, and whenever you can get hold of a Michiel Leroux, who's a notoriously media-shy individual, there's a sense of real entrepreneurial, kind of no-nonsense, no-frills builders, but always focused on, the strategy and the little building blocks on how you're going to get there. And it sounded like quite a good cultural fit, actually, given what you've just said about Mercantile. How did those initial conversations come about?
Yeah, it's an interesting story. So when we sat at my patio coming up with a strategy for Mercantile, we actually used Capitec as the case study. We said, that's our role model. That's who we want to be like. And we analyzed them and we were trying to work out how they got, obviously their growth. And then I was called in at about end of 2016, flown to Portugal to meet the board. And they said, because of stuff that happened in Portugal and Europe, they've decided they've been told they have to sell us. Yeah. So they said to me, they're going to have to go through a proper process. They appointed Deutsche Bank to run the process. It's like a tender process. But they said, but you can go and start approaching companies you think who would be interested in buying you. And I said, that's great. So we put a presentation together. And funny enough, the first company I went to was Capitec. Now I met Gerry and the old CFO, Andre de Plessis. And I said, look here, you guys have done so well in the retail space. You've completely changed that market. And surely you must be going into SME banking at some stage. Would you be interested in looking at us? Because that's our game. We're in business banking. And then they said they like to build, right? So they're probably not going to buy us, but they will have a look for sure. And then it went through a process. The process, it took 2 years. Yeah? And as it went through the process, I think they realized that for them to build what we already have, Forex department, business banking, core banking, all of those things, probably take 7-8 years. And you just see how long it takes for new banks to establish themselves. And they decided, look, we can buy Mercantile. We can then change it to what we want, and it'll probably take you 3 or 4 years. Yeah. So let's go for it. And they upped their price, dropped the conditions, and they were the successful bidder out of 18 bidders in the end. Yeah, so we were extremely excited and relieved that they decided to buy us. Yeah.
Yeah, and quite serendipitous given that, as you say, you were sitting on the patio or the stoop all those years ago, setting out the vision back in, the early 2010s. And here, Capitec is the one that eventually acquires you, having modeled so much of what you did around what Capitec was doing. What is it that stood out for you around, the Capitec model that resonated with you when you said, right, we can emulate that? What was it about Capitec that you appreciated?
No, it was just at that stage, because you didn't have the inside edge there, but it was just the entrepreneurial spirit. Yeah, I think that was it. So how do we think differently? How do we do things differently? How do we think about what we can do for the customer? That to me was what we thought about in those early 2010 days on my patio. And that's what we put the client first. Yeah, so that's what we learned from it.
I've never understood how business banking costs have always been structured in such a way that significantly makes them much more expensive than what you get at a personal banking level. If you've invested in the core systems, as you say, it does take time to invest in the Forex capabilities and, maybe with import-export clients to talk credit guarantee insurance and that kind of thing. But where did you see the big opportunity to disrupt the incumbents and the established business banking offerings and what we see today?
We actually, when the deal went through, we sat with Capitec, and what you love about Capitec is it's a completely flat structure. We don't care about titles or anything. We're there for one reason only, and that is to improve the client experience. Yeah, and keep building it and try and drive down the cost of banking for clients. So we actually locked ourselves in a room for a week, almost like my patio, years earlier. And there was about, I don't know, must have been 10 of us from Mercantile and Capitec, and we said, right, what do we actually want to build? And then it was actually quite simple. Capitec has these 4 fundamentals, right? And we decided to build everything on those 4 fundamentals. And the first one is simplicity. And what we want to do is have a simple offering. Now, if you try and open a bank account, a business banking account at another traditional bank, I can tell you now there's between 20 and 30 different offerings, bundled offerings and agricultural offerings and offerings for doctors and offering for franchises and different pricing structures for small businesses and large businesses and medium. So it's extremely confusing. And we said, no, we're going to do like Capitec did. We're going to have one account for all businesses. And it doesn't matter whether you're the little hairdresser or if you're a factory with 1,000 employees, you get the same. You get exactly the same pricing, you get the same everything. And so that's what we said. That's the first fundamental. And the second one was affordability. We said we want to become the most affordable in the market. We genuinely believe that SMEs have been charged way too much their whole life. Yeah? And how do we go out there and actually just start charging what we should be charging? And why should pricing be different to retail banking, as an example? So let's go and price all of our transactions at the same price as retail. And now if you had to move from a traditional bank to, as you'd probably say, 40, 50% in bank charges. So we've done that. And then the next thing was accessibility. That's another fundamental. And we said, how do you make it really easy for a client to access banking? So we built an app and an online banking platform. And the whole idea is over time, we want the client to do 80% of whatever the needs are electronically, digitally. But then at the end of the day, you can only do so much digitally. If you want to speak to a banker, you got a query, you want to structure a transaction a certain way, you want to buy the building you're operating in. A fourth fundamental is personalized service. So we built a relationship suite where we've got a whole lot of bankers, and you can at a touch of a button, you push the button, you get through to your banker. We've got a fantastic CRM system. We've just installed a new loan system, and we talk to you and help you through whatever your query is. So that's the first. So those are the 4 fundamentals we built Capitec Business on, and that's what we continue to build on. Yeah.
The one thing that also stands out around the Capitec journey is focus. And in the early days, when I think Yanni Mouton approached Duplessis and Fourie and others and Starson and spoke to him about, why don't you boys get into selling funeral cover? And they refused to because they wanted to focus. But they've subsequently now obviously realized they've built this core system. They're building on banking. And did you have to convince the board at that stage of other areas of the business banking suite that you wanted to attack, or is it a case of let's focus on those 4 pillars first and then let's see how we can expand from there?
Yeah, that's exactly right. And funny enough, the board, Giel and all of them, still sit on the board. So they understand those 4 fundamentals perfectly from day one. And the amazing thing is the focus is still there. To this day, with Giri, and Henk, there's a few founders still there. We're extremely focused. We're going through a process now of 2 to 3 months putting our book of work and budgets together for next year. And that's really to say, how do you cut out stuff and do less, but try and really get the stuff you're going to be building to 100% and rather not take on more work, if that makes sense. So let's get the basics right. So everything we build has to comply with the 4 fundamentals, but we have to focus on just 2 or 3 things and then get to do those really well. And once you've got those done well, then you can move on to the next thing, and then the next thing and the next thing, as long as it's adding value in the client's life.
And because we have seen Capitec growing a portfolio beyond banking, you've got Capitec Connect, you've got those various value-added services. How does that fit with Capitec Business, and what does it mean for an SME banking with Capitec today versus maybe 5 years from now?
Yeah, look at today. Okay, we got the Connect, but it's sitting in the retail space. So you can go to any branch and get a SIM card. And once again, you want to be the most affordable in the market from a data point of view. So you can buy your bundles there. But if you just think about it, we've got 22 million clients on the retail side now. We're starting business banking. So we got say 100,000 clients. We want to get to 1 million, 2 million clients over time. And we've got our own insurance license, and that went live, funny enough, yesterday. We transferred from the old Sanlam cell captive we had. That's now moved into, we're running all of the claims for funeral policies for ourselves now. So we've got that business, it's ours now. So we've got these 3 businesses: business banking, retail banking, and insurance. And if you look 5 years from now, I think if we say we were successful, is that we would have grown the business banking base, we would have grown the insurance business through new products like the new life product we just launched.
Yeah.
And then put all 3 of these businesses together, where we're creating this, say, an ecosystem whereby there's 22 million clients that can actually shop at our millions of businesses, and these businesses are banking with us because they got these clients wanting to spend money at their businesses. And then it's to say we've got to connect business. For sure, it has to go into business banking at some stage. So think about, you got a router, you want Wi-Fi, you got a point of sale device that needs a SIM card. Yeah, so we'll start adding. You need cell phones for your staff as a little business. So we'll sell Connect. We'll sell life policies into our base as well, because every entrepreneur, especially if you're in a partnership, you want a life policy in case something happens to you. So all of these businesses, they all fit together perfectly, but it's going to take time to bring it all together. I think that's the exciting part. That's the growth part for our business going forward.
Absolutely. It's probably one of the most exciting parts that I see in South Africa on the business banking side. We've seen the rise of these alternative lenders. There are a few that really are leaders in the space. I think of Merchant Capital and a few others who kind of service businesses that the traditional banks weren't looking at, be it invoice lending, building a thicker file on a thin file business banking customer, and extending and bridging finance or working capital, all of those little things. If you're a Shebeen owner and you need to go and replenish stock, and understanding that market. Now, I see Capitec as that's really where they've shown a keen eye and understanding of that particular market. Are you seeing a similar opportunity here in the business banking space to say, right, the GG Alcox of this world, and they always talk about this big untapped potential that we have in the, what Thabo Mbeki used to call the second economy. If we can harness that, then there's a huge growth runway for our business, but also, ready for South Africa more broadly.
No, for sure. We've actually met GG a few times, but there's a massive opportunity. So let's go back to the fintech question. For sure, there's quite a few fintechs out there. I mean, you know who they are, but a fintech's fantastic, and they've all done a great job. They've solved for one inefficiency, whether it may be a point of sale device or it's a lending product or something. So they've looked at the market and said this thing's not well serviced, and so they do really well at that one thing. Now we see ourselves as a large fintech. We're a tech company. That's the way we look at Capitec. We're a data-driven tech company. So we can offer, if you think about it, the full bank account. We can offer the point of sale device. We can offer the loan. We can offer all of these things. So you offer a full package and still price a lot finer, because we look at everything we're selling to the customer. So that's where we see an exciting opportunity, is to act like a fintech, but we offer the full offering, not just one thing. And then if you look at it, we call it emerging markets, the whole township economy. And that's massive. We estimate probably 2 to 3 million little businesses there. And people talk about the unemployment rate being in the 30s, but if you just go into a township, you'll see there's a lot of people that you're unemployed, but you're running a business with 10 employees, if that makes sense. But you're considered unemployed. So I think we saw this opportunity there. We put a team in Tembisa for 2 years just doing analysis on that economy and understanding what the needs are. And the needs are quite simple. There's 3 things we realized. Is one, you want an affordable bank account. We can offer that, so you can tick that box. The next thing is you want to be able to accept payment electronically. There's too much cash floating around, so how do you make it really affordable to accept cash through a point of sale device? And lastly, access to finance. That's everything. If you can get access to finance to help grow your business, you're going to do that. So we've now, we've launched our emerging markets proposition. We've actually just run a special for 3 months now on point of sale devices. And we've also lowered our commission rates to the lowest in the country. And we're the only bank that's actually transparent in what you're going to pay. You're going to pay 0.85 and 1.85 on debit and credit card. And that's it. That's the max you'll pay, and that's the standard rate. It's not where you price everyone differently. And you can buy a point of sale device in our 850 branches around the country, and you onboard yourself there and then, and you can walk out of there and start trading. So we launched that literally 2 months ago. So we see that market is very exciting, and that's the future, and we're hoping we can make a real difference in that space.
It's very interesting against the backdrop of the recent SARB report on cash in the ecosystem and how at a consumer level there's still quite a lot of distrust of digital, and the numbers of how much cash is drawn on payday every month from retail bank accounts. And if you look at it, I think very much in the informal space, SMEs are sometimes wary of digital first banking. How are you overcoming that maybe trust deficit to give them the best of both worlds, give them the tech efficiency and the low cost that comes with, but also to offer that relationship? And what are you seeing in terms of a demand for that kind of high touch but high tech experience in that demographic?
Yeah, look, I mean, to use a retail bank as an example, if I said to you who's the largest digital bank in the country, you would never say Capitec, but we've got 12 million digital users now on our app, right? So 12 million of our clients have an app. So people are digitally savvy. Yeah, everyone understands the app. Everyone can buy airtime on the app. You can buy vouchers. You can open an investment account. You can do all of those things. So I think one underestimates the tech savviness in the market. So you got to make it affordable to be able to accept a payment electronically. So and that's why we've gone in with an affordable bank account and an affordable device and reduce the commission rates. And you got to get these commission rates below cash, below the cost of depositing cash. That's where if you look at the debit card rate, which is mostly in the townships, debit card, we on 0.8. Yeah, so that's already way below the cost of cash. So what we're trying to do is give them the tools to be able to accept payment electronically, and also, with PayShop coming in and request to pay, and these are all exciting things that SARB's been driving from a payments point of view. The new payment rails make it really affordable. So you can build some nice solutions around that. And then the most important thing is to be able to sell the fact that if we see transactions going through your account, we then can credit score you, and we can actually lend you money to help grow your business. We're going to give you working capital. And you think about it, if you can give someone 20 grand working capital and they can buy 20 grand more worth of stock, they'll turn that stock over 2 or 3 times in a month, and they got a 30% margin. They're making a fortune compared to the interest rate they're paying. Yeah, so I think that's the exciting part for the entrepreneur, to show them if you can push transactions through your account, we can actually lend you money and you can help you grow your business.
They can see the value. I mean, that solves for the trust issue almost instantaneously.
Yeah.
Given your push to grow the pie rather than just chase the same customers as competitors as well, what do you see as the next maybe untapped segment that you're most excited about in business banking?
It's definitely this one. So you're exactly right. So what we want to do is we want to create a whole new market by going in, but also it would be quite nice to get competition going in that space. I mean, Kelly said it the other day in one of his presentations, we're happy other banks, hopefully everyone's going to compete in that space to drive down the cost of banking so that you actually get this economy going. And the more competitors, the better, and the better it is for the clients. So I think this is a massive untapped. I mean, at the moment, we got 1% market share in the business banking space. And so our job is just to get the basics right, keep it simple, provide great service to our customers, and then hopefully take market share away from the existing pie and then create a whole new market on the side in the emerging economy. Yeah.
And then just for you personally, you've seen from your history a various kind of array, different, more corporatized, traditional banking structures, something maybe a little bit more entrepreneurial. If you look at the way you're doing banking today, what is the most surprising thing for you that someone would have really struggled to convince Karl Kumbier 15 years ago that this is the way we're going to be doing banking in 2024?
I don't think it's anything like that, but I think it's, I've always been an entrepreneur. My parents, brothers, sisters, everyone's entrepreneurs. And I've always wanted to run my own business. And I honestly believe this is like you running your own business. Yeah, you might be part of a large corporate, but I see Capitec, it's a large bank run like a small bank in that you got a flat structures. Gerry's involved in our meetings. Yeah, he spends 2 days with us a month in our excos here in Joburg. Yeah, and he's challenging us on every single thing we're building and doing. So you just see the energy coming from all sides. Yeah. So I think I'm finally being an entrepreneur the nice, lovely part about it is I got the Capitec brand behind me. We've got the balance sheet that we don't have to worry about deposits because there's 180 billion rands of deposits there. So we got the access to all the Capitec technology skills. They're helping us at the moment, refine our product offering. And we've got the scoring as well. We never did scored lending in the past. We've been building a scorecards for our small businesses now for 2 years, and we've launched those now. Those are going nicely. So I would never have thought we'd have access to all of this thing where we can make our dreams come true of really making a difference in the business banking space.
And no need to relocate down to Stellenbosch.
We're still here in Joburg. So the business banking head office will remain in Sandton. And then obviously I'm up and down all the time, but the head office for business banking is here. And it's nice because, it forces Gerry them to come up here for a bit as well. Back to Joburg.
So there are no more escapetonians, I think, as Michiel Leroux likes to refer to them as, the Joburgers who finally give up. I love the city. It's my home. It's where my kids are very happy. I do hope politically we can turn things around because there are a lot of challenges around service delivery. But I just think it remains the economic heartbeat of the country and a very vibrant, great place to do business. I've got to ask you, just on a very broad level, your thoughts on where interest rates are in South Africa at the moment. And I know the time is quite different to when Jill Marcus was governor, but the real rate was closer to 3%. If you look at our real rate now, we're probably closer to 7%. We've got a fantastic Reserve Bank. I have a lot of respect for the governor, Lesetja Kganyago. He has been critiqued by some notable economists, Brian Cantor at Investec, one of them, that he's too hawkish and that he does need to start being a little bit more flexible in terms of adapting to the needs of the market. Do you think interest rates are at appropriate levels in South Africa?
Look, yeah, I think it's also you don't want to rush into anything. Yeah, so you don't want inflation suddenly spike up again. So I think that's right. We're seeing interest rates coming down probably now again in November, as well as again in January, 25 bips a time probably. So I think you'll see a steady drop in rates, and then next year we're seeing probably another at least 2 rate cuts. And I think you'll see if we have 2 of them in a row at 25 bips, and inflation is still well under control. And we can see that we're starting to have positive GDP growth. I think you might see bigger rate cuts. So I think we're on a downward trajectory now for interest rates for a while, hopefully. And the Reserve Bank has to remain, I suppose, conservative. And I think at least we're getting there now. The rates will be dropping now.
Yeah. Much like I'm sure you manage the balance sheet, conservative, but certainly not conservative on innovating around opportunities when it comes to servicing the business banking clients that you're looking to grow, and many of them over the next few years. Karl, thank you so much for taking us behind the curtain of Capitec business. Really interesting to get a front row seat to this ride of shaking up the business banking scene and listening to your passion for the opportunity. It's clear that there's a lot more to come from Capitec Business in future. Thanks for your time.
No, thanks so much for having me. Appreciate it.
Well, for our listeners, whether you're an entrepreneur, a small business owner, or just a banking enthusiast, I'm sure Capitec is one that you're keeping an eye on. Who knows, next time you need a loan and maybe a Showmax voucher, Karl might have you covered there. Karl, once again, great having you on the show, sharing your insights and keeping the competition on their toes. Until next time, folks, I'm Michael Avery with the Monocle Banking Podcast.